Hey friends, today we're diving into Singapore Airlines stock, SGX ticker C6L, and asking the big question, is it worth buying at 680? With record-breaking revenues but falling yields, this stock has been making waves in the market. Most people think airlines are a safe post-pandemic recovery play, especially when you see headlines about record profits. But here's the twist. SIA is facing stiff competition, rising costs, and dividend risks that could make or break your investment. I've analyzed hundreds of stocks over the years as part of the Investing Iguana community, ranked 8th in Tiger Broker's 2024 Influential Tigers, and today we'll break down whether this blue chip airline deserves a spot in your portfolio. We'll cover 5 key points: SIA's financial performance, its juicy dividend yield, passenger and cargo trends, strategic initiatives like the Air India-Vistara merger, and what analysts are saying about its future. Hey friends, welcome back to the channel. I'm Iggy from the Investing Iguana, your go-to source for stocks, finance tips, and everything wealth-related in Asia Pacific. With over 700 videos and 300,000 watch hours under our belt, let's dive into whether Singapore Airlines is a buy at 680. Let's start with Singapore Airlines' financial performance. The company reported record revenue of $5.2 billion in Q3 FY 2025, a 2.7% increase year on year. But passenger yields dropped by 4.5%. Operating profit rose by just 3%, while net profit surged due to a one-off accounting gain from the Air India-Vistara merger. Think of this like scoring high on one exam because of bonus points, while your regular grades stay average. It looks good now but isn't sustainable long-term. This shows that while SIA is recovering strongly from the pandemic, its core profitability faces pressure from competition and rising costs. So, profits are up. But what about those dividends everyone loves? Let's talk about that next. At a trailing yield of 7.48%, Singapore Airlines is one of the highest yielding stocks on SGX, but analysts warn this may not last as free cash flow shrinks. Its PE ratio of 10x looks cheap compared to peers like Cathay Pacific at 17x. Imagine buying a car with great mileage but realizing you might need to replace the engine soon. That's what dividend investors face with SIA right now. While the yield is tempting for income seekers, sustainability concerns make this more of a short-term play unless earnings stabilize. Dividends aside, let's look at what really drives an airline: passenger and cargo trends. Passenger volumes hit a record high of 10.2 million in Q3 FY 2025, up 7% year on year, but yields fell due to competition. Cargo revenue grew by nearly 10%, driven by e-commerce demand. However, cargo load factors remain below pre-pandemic levels. Think of it as running faster but earning less per mile. You're working harder for smaller gains due to increased competition. These trends highlight both opportunities, such as growing passenger numbers, and risks like yield compression, which investors must weigh carefully. Passenger growth is great, but can strategic moves like mergers offset these challenges? Let's find out. The Air India-Vistara merger gives Singapore Airlines exposure to India's booming aviation market, but comes with integration risks. Meanwhile, fleet upgrades aim to boost premium demand by 2030. Picture upgrading your house while also investing in a risky new business. There's potential for big rewards, but also significant risks if things don't go as planned. These initiatives could drive long-term growth but won't solve near-term profitability issues like falling yields or rising costs. So what do analysts think? Are they bullish or cautious? Let's wrap it up with their insights. Analysts are split on Singapore Airlines' future prospects. JP Morgan recently upgraded SIA to overweight with an SG $8 target price, while others like OCBC maintain hold ratings with targets around SG 630 due to yield pressures. Consensus estimates imply limited upside from current levels. It's like having two friends argue over whether you should buy an iPhone now or wait for the next model. You need to weigh both opinions carefully before deciding. The mixed ratings reflect both optimism about long-term growth and caution about near-term challenges like competition and cost pressures. All right, friends, let's recap. Singapore Airlines has strong fundamentals with record revenue and high dividends, but faces challenges like falling yields and rising costs. If you're looking for short-term income through dividends, this might be worth considering, but only if you're okay with potential risks to payouts. For long-term investors, keep an eye on strategic moves like fleet upgrades and the Air India-Vistara merger. They could pay off big time down the road. And if you're still wondering whether to buy or hold Singapore Airlines stock at this price point, check out my video titled Singapore Airlines SIA Stock Rated Hold, Why? Where I break down exactly why analysts are cautious despite the airline's strong recovery numbers. Thanks for watching. Don't forget to like, subscribe, and hit that bell icon for more content from the Investing Iguana.